Hey everyone, in this video we're going to go through 3 top outdoor stocks to buy or add to your watch list in 2023. Now before going into these companies in a bit more detail, if you haven't yet, please subscribe to the channel, hit that thumbs up button, it really helps me with the YouTube algorithm. And if you have any thoughts on any of these companies or any other outdoor companies, would love to hear from you in the comments as well. Okay, we're going to jump right into it. The first stock I want to talk here today is Vista Outdoor. So before going into a bit more detail about the company, if we just look at their stock chart over the last 6-7 years, you can kind of see it's been a pretty volatile ride. The share price was up in the 50s, went down to the mid-single digits even, and then during the pandemic, as people were spending more time outside, the stock rallied almost 9 to 10x, so almost 1,000%, and now has gotten cut in half again. As that kind of soaring demand has eased. So the stock's been very all over the place. Even just looking over the past 1 year, it's down 25%. The whole company's worth about $1.5 billion, so not a huge company. And they have a trailing PE of about 4 times, given how strong the last few years has been for them. So this is an interesting company just to try to understand, is that PE actually that low forward looking? What is this company doing from a strategy standpoint? What companies do they own in terms of brands? So we're going to get into that right now. In terms of what companies they own, they have a huge portfolio of brands across sporting products and outdoor products. You can kind of see some of the products they have here that do over $100 million of sales. They have lots of, seems like, gun and ammunition type companies. I recognize Remington, but I'm not sure about lots of these other ones. But they also play in a lot of different segments within sports and outdoor products, which we'll get to in different areas of this video here. So before going into some of the other areas they play, I thought it would be valuable to go through their capital allocation model, and especially when you're dealing with a company who's just kind of come into an influx of capital from the amount of profit they made over the pandemic. It's really interesting to see how are they allocating that capital. So let's see what they're saying here. They're saying out of their 4 buckets, they have internal investment, making investments where they think they can drive internal organic growth, acquisitions, share repurchasing, and then maintaining low debt leverage. So those are pretty standard areas to allocate capital to. It looks like they don't pay a dividend, so their shareholder capital returns really via share buyback. So we'll take a quick look at that. But what we'll see a lot of is strategic acquisition, even more so than internal investment over the last number of years. And when we look at how they've actually allocated their capital, they've invested $900 million over the last 3 years. And remember, this company's current market cap is $1.5 billion. So that is massive in terms of the amount they've invested in their business. You kind of see here, out of that $900 million, the vast majority of it has come in acquisitions. Almost $700 million of it is acquisitions. 18% of it is CapEx and R&D, and then 12% is share repurchases. So I'm actually surprised that such a little amount of their capital allocation is in CapEx and R&D, especially since they kind of call it out as the first thing that they're looking to do. So we'll get into that a bit more as well, but it seems like this has really been a grow from acquisition company after the profit headwinds that they fell into over the last couple of years. And instead of buying back shares or paying a dividend with it, they're looking to grow by acquiring new companies. Okay, one of the biggest acquisitions it looks like they've done is Fox Racing. It was a $500 million acquisition, and they have a couple slides that I want to go through on it, just because as we're looking at the whole scope of the company, this is a big part of the stock that you're buying, given how big this acquisition was for the company. It was almost more like a merger, given its size. But they feel like they have some great secular tailwinds in terms of the categories that they play in. They think they can drive a lot of synergies from distribution, material costs, sales channels, stuff like that. They like the brand. They think it has a lot of momentum, and the space they play has a lot of momentum. And they like the talent that they're getting with the acquisition. So pretty standard things in terms of calling out synergies and why an acquisition makes sense. So we look at Fox Racing. It will become the 40th brand under Vista Outdoors. So you can just get a sense for how many brands that they own. 40 with this one. It looks like Moto, which I don't know if that's motocross or what these stand for, but it looks like lifestyle, so more like apparel, I'm assuming, is 20%. Biking, non-motorized biking maybe 40%, and then motorized biking maybe 45%. I'm just guessing on those. But it's good to see that this company has been in the market for a long time, is pretty diversified geographically, has pretty good sales numbers. So 350 million in net sales, and they bought the company for 5 to 600 million. They paid under 2x multiple on sales. Looks like they paid about a 10x multiple on adjusted EBITDA, and margins look not great, but at least this company is making solid money and going to be returning cash to Vista Outdoors. In terms of their track record on acquisitions and how they've been able to build success, you can kind of get a sense for their portfolio here, some of the acquisitions that they have made, like Fox, but then what it's adding to in terms of what they already have. I'm not huge in the biking or the hiking space, so I don't really resonate or not really sure what lots of these brands are. But this is just to show how much of a focal point acquisitions are for this company. And then as we look at Fox Racing and the industries that they play in, oh, I was right. So moto is motocross, mountain biking was MTB there, and then lifestyle is the remainder. But you can kind of see the product lines that they offer here. Just guards, pants, helmets, gloves for motocross, mountain biking, helmets, jerseys, guards, shorts, and then just casual apparel products on lifestyle. Another acquisition that they recently made was bolstering their off-course golf business. So they acquired a couple different companies here. The one that they really call out that they acquired is Forensic Sports potentially. It looks like they're just looking and acquiring simulators or a simulator company, and they're really bullish on just the amount of people that will be playing golf off course because it's just like a quicker way to play. It's more convenient. You don't have to go out for 4 hours. You don't have to walk 10 kilometers. And they just go on and on here about some of their different exposure to this space. So you can see the software and the hardware in terms of launch motors and simulators. Seems to be another acquisition. And they're just acquiring all kinds of different sporting goods companies like this, as along with outdoor companies within the Vista Outdoor portfolio. So that brings me to what's next. I think they are running into a bit of a value creation issue for shareholders, because when we look back at the stock's trading at 4x trailing earnings. I think part of it is their exposure to guns and ammunition. Those companies tend to trade really cheap, and that may be holding back the broader company. So what we see them doing here is planning to split the company into two businesses, having an outdoor product side of the business and then a sporting product side of the business. What that would look like is a sporting side of the business that's the leader in ammunition, essentially, and number one global player in ammunition, does almost $2 billion in sales annually. Pretty high margin, but this company, I think, will trade at a pretty low price to earnings multiple, just given some of the competitors in that space. And then the second company, which I think is where they're really trying to extract a lot of value and get a better multiple on, is the outdoor products side of the business. So this company will do 1.3 billion in sales. 20% of that's online. They've really been bolstering this side of the business with acquisitions over the last decade in kind of the build up to splitting this company off to go public separately. 7-9-figure brands. So that's kind of what the future of this company looks like, and potentially getting into the stock now when this change happens may unlock a lot of value if what they believe or want to happen actually like actualizes that way. In terms of multiples, so this is a $26, $27 stock. They're going to do about $6 of EPS this year. So it's trading at 4 to 5 times. It's going to do $5 next year. So trading 5 to 6 times next year. So as long as they invest their capital in a way that makes sense, I wish they bought back more shares with a free cash flow yield of 15 to 20%. But as long as they are allocating money to accretive acquisitions and things that are going to make it so when these companies split, they're both going to be not very leveraged with debt and well positioned to get a good valuation by the market, this company seems like it's at a pretty good entry point to me. And I'm actually going to go ahead and add this one to my watch list, do some more research, because I think there's just like such limited downside from a multiple standpoint at least. And they already have forecasted in to have some EPS declines over the next year given the change in the macroeconomy. So I just think there's probably more upside than downside, especially with the split on Vista Outdoors. Going to the second stock we're going to be talking about today, it is Hayward Holdings. So this is a bit of a smaller company as well, $2.3 billion market cap. If we look at this company a bit longer term here, they went public at $17 in 2021, immediately went up into the 20s, and then have gone down over the last year or so. So in the last 1 year, company's down 30%, $11 share price. I think they make EPS of 50 to 60 cents a share. So you're talking about like slightly under a 20 times multiple. This is a company that operates in the pool and outdoor space. So if you look at their product strategy, where they play, they make pumps, they make water systems, sanitization systems, heaters, lighting systems for backyards, and Internet of Things control systems for your backyard as well. So a mix of kind of like old school pumps, heaters, with, new technologies on Internet of Things, sanitization, lighting systems, stuff like that. And this is kind of the arena they play in currently. If we looked at their performance just over the last quarter, they make pretty good margins. So gross profit of about 110 million on 250 million of sales. So you're talking about like 45% gross profit numbers. They didn't have a great EPS quarter, just about 11 cents, give or take. But this company is still relatively new. It's growing quickly. You can see net sales was up 27%. Acquisitions were only 2% of that. Pricing drove plus 9% growth. So they're growing. They have healthy margins. They are profitable on the bottom line. And hopefully as they grow further, their profitability will scale. Going into their earnings estimates here. So this year, they're estimated to make about 60 cents a share. So like I said, probably trading at about an 18 times current year. And then next year, they're really looking, or analysts are really predicting EPS expansion up to 75 cents. And that's where things get a lot more interesting. That's closer to like a 13, 14 times multiple of today. And they play in a pretty somewhat defensive space. If you have a pool, you're going to need a heater, you're going to need a pump, you're going to want good water quality. I guess some of these things on Internet of Things and lighting are probably a bit more discretionary, but still, as you're acquiring clients, the more you can cross-sell them, the more efficient you can be and the more profitable you can be across the products that you serve. Here they kind of talk about how they leverage their scale across their business in order to drive a higher competitive moat along with higher profitability through technology, operational excellence, and just building the Hayward's brand, which is well known in this space of residential pooling. So this is one, as I compare and contrast to Vista, probably a bit safer from an operational standpoint, but trades at a significantly higher price premium. And because of that, I think Vista is probably a better name to put on my watch list versus Hayward's. But that's just from doing a very quick and dirty top line look at the company. Going into the third and final stock, outdoor stock to consider buying in 2023, it is Pool Corporation. So this one went on a wild ride. During COVID, everyone was trying to get pools in their backyard, fixing their pools, updating their pools. The stock went up from 167 bucks up 250% to over 500 bucks. Similar to Hayward's and Vista, we've really cooled down, back down to $330. The PE looks to be in the high teens as well, similar to Hayward's. It pays a very small dividend there. As we look more about this company, geographically, this is essentially a US play. 90% of their sales come from the US, but it is nice to see that they do have a European and a Canada division as well. Maybe those can be future growth engines since they're significantly overdeveloped in the US. But just know you're pretty much buying a US company here. In terms of what their revenue streams are, 60% are maintenance and repair, 20% are remodels and upgrades, and 20% new construction. So one thing that I like about that is no matter what the economy does, they're not really relying on people to get new pools or upgrades as much as they are for just people with existing pools to need them maintained and repair, which is probably a safer revenue stream. They do still have some volatility, obviously, on like new construction and stuff like that. But overall, I think that's probably a beneficial revenue stream or revenue mix for them given the environment we're in. And then the other thing to know is like 80% of their revenue comes from contractors or building managers. It's not too many like backyards necessarily. Residential backyards, I'm assuming, is what like retail and other are. So that's only a fifth of the business. So that's good to know as well. Looking at their revenue, you can kind of see while their stock price has done well over the medium term, they've doubled their sales since 2016. So they went from 2.6 to 5.3 billion. This company is a $13 billion company, so trading at about 2.5 to 2.5-ish times net revenues. In terms of profitability on this company, they're expecting $16 per share this year, $18 per share next year in earnings. So on this year, they're trading at about 20 times earnings right now, and then about 18 times 2024 earnings. So not a cheap stock. I think that's pretty richly valued given that they do have reliance on people and new construction and people upgrading pools and stuff like that, which is somewhat discretionary, even though it's not their main revenue source. So I have a very similar thought on Pool Corporation as Hayward's. If I was to pick one out of these three stocks to put on my watch list, I'd put Vista Outdoors on it just for their diversification, the potential unlock of value from their upcoming split of the company, and then just their starting PE being significantly cheaper than the other two names. So that's my thoughts on these top three outdoor stocks to consider putting on your watch list or buying in 2023. Would love to hear your thoughts in the comments. Also, if you've made it this far in the video, please be sure to like the video, subscribe to the video, and not many people make it to the end of my video. So I'd love if you did, if you can let me know in the comments, just to say hello and that you watched the video in full. I'd really appreciate it. So thank you guys for watching this one, and I'll see you guys in the next one.